Why you keep losing trading the supply and demand trading strategy. This guy has lost 12 trades in a row. He says, I've been trading this strategy for over 1 month following all of your rules, but I have had 12 losses in a row. So I have all of his trades right here. We're going to break them down. You can't make money in this game making 50% of your trades being trading mistakes. We're going to be diving deep into his trade reviews, understanding market conditions, understanding what a quality setup has in common, and how to actually profit from a trade that's going to lose. We can take the opposite side. So it's a lot of good lessons. We're going to dive deep into this. So I appreciate if you guys like the video, subscribe, and if you guys have any questions, you guys can reach out to me on social media at MoneyballAustin. Let's get into this. So the first thing I want to break down is he said he lost 12 trades in a row, but he only sent me 9. What happened to the other 4? I don't know. I can only assume that they were probably poor trades or he didn't journal. Okay, but out of these 9 trades that he sent me, I can review them. Okay, and so for the first trade I want to look at is this short in gold. He is entering a 4-hour short in gold. Why are we entering a swing short in gold? Let me bring you up to a live picture of what gold looks like. These were trades that he took last week, all right? Understand, this is a daily picture of gold. Why are we swing shorting gold on a 4-hour time frame when gold itself for the year, it's up over like 20% for the year? Why are we swing shorting gold on a 4-hour time frame at all-time high levels in a weekly, monthly, daily 4-hour uptrend? So why are you going to swing short something? To me, that doesn't make any sense. So that's the first problem, is you don't understand the market condition that you are currently in. So he's selling back into this 4-hour supply. He's selling back into this area on a 4-hour supply zone. If I'm going to get short, I've got to be prepared. I'm probably going to be in this position for about a week on the low end to the high end a month potentially, okay? So like a week to a month, I'm probably going to be swing short. This could be longer. Like I said, why are we swing shorting gold when a market's up over 18%? A lot of the fundamental news bias is coming out poor for the US economy going into a potential recession. Why are we swing shorting gold? Okay, to me, that doesn't make any sense. I would much rather be swing longing gold itself. Okay, so that's one of the biggest problems that I hear is people lose context of what is happening in the market. They get so fixated on, oh, look, it's a good technical setup, I have to take it. No, you need to understand some type of discretionary intuition type of trading, and that's why I uploaded a video on it. It's one of the hardest things to build because you learn that through time and experience, okay? So if I look at his trade setup right away, it's not a bad idea. You know what? It's a pretty good 4-hour supply zone. I might consider looking for 5-minute, 1-minute shorts up in here. I think that's okay, all right? I'm not against day trading shorts for the day, okay? I do that too, but understand, let me look at some of these trades. This was a buy setup itself right here that some people took. Back into this 4-hour, 5-minute demand zone. People bought this setup right here. Now the setup that I was buying into was back into this area of 5-minute demand. Prices pulled back into that area, and then I executed my longs when I saw prices transitioning from a downtrend to a sideways market to an uptrend, and I'm getting long on the pullback, okay? But I see that market condition change from a downtrend. We go down, we go sideways, and we start trending to the upside. Gold is very bullish right now, so I want to be looking for buying opportunities. So that was the first buy of the day. Okay, we're still talking about market context and understanding the conditions. This was another buy. Hey, I wanted to buy this thing because I really believe it's going to go up. All right, another buy setup. This one was a loss. It's trailing to the upside. For the day, I've already had 3 buy setups. But then what happens later on in the day? Okay, this is why you can't get married to your positions of say it has to go up. Look, for the day, it was just going to the upside this entire time. Okay, we were just looking for buys. But until this happened, then we got this massive sell-off happening. I'm flipping my script to say I'm okay with entering day trade shorts, scalp shorts, day trade shorts, because this market is collapsing at this time. All right, so I want to take advantage of this, all right, and try to sell this to the downside. Before that, this is what the market looked like. It's going up, all-time high levels. I'm trying to buy this thing. But now that it's removing key levels of demand support, breaking 200 moving average, okay, I'm trying to sell these things. And so that's why we started entering short positions, all right? Now I flip my script to say, hey, I want to be entering short now, trying to trade with this market. It's the same setup. I'm going to be selling inside supply zones. It's a little blurry, I apologize about that, but it's the same damn setup that I'm going to be looking for. If I think that this market's going to go down, I'm going to see pivot point zones being removed, momentum lines being broken, and I'm going to short the pullback back into that zone. All right, it's the same setup you see here. Breaking momentum line, removing opposing pivot point zones. We have strong quality zone being created, and I short the pullback back into that area with my stop loss above here as a structure stop loss. Notice how I don't have my stop loss right here. All right, that's a big problem that I saw in this guy's trade review. Okay, but that's the first thing I want to have a look at in this guy's trades. When we go back to his trades, we go back to this. Why are we swing shorting gold? I don't understand. That's a pretty bad mistake. I like the supply. I agree we could look for selling opportunities maybe in here, but I wouldn't be entering a swing short position. All right. With all that said, this was a trade that he took on the NASDAQ. He got long on this 4-hour pivot point, 4-hour demand zone down here. I really like this idea actually. Now let me explain to you why. The overall technical approach to this is quite good. I really like this demand zone that he's buying into. Why? I've made a video on this before. I will have it in the description below. It's done very well in views. You guys seem to really like it. So I will have that in the description below, talking about what is technically the best setup to be trading in this strategy. Okay? This is something I really like about it. He has his lower lows, lower highs. He's got a very strong move to the upside. It's removing this opposing pivot point zone. It's breaking downward trend line, and we have a very strong quality zone being created. Okay, so we have very strong imbalance within the first 3 to 4 candlesticks. It's blowing past this opposing pivot point 4-hour supply. It's breaking downward momentum line. Okay, so these are all good things that I like technically in a setup. Okay, why might else I really like this thing? All right, he's trying to buy the NASDAQ. We know that the stock market is rigged to go up. Okay, I would much rather be long, a swing long the NASDAQ or swing long the S&P rather than swing short. Why would I enter a 4-hour swing short, aside from the market collapsing over the last 2 weeks? Okay, why would I enter a swing short when the market looks like this? I would much rather be entering swing long positions. Okay, this is once again understanding the market that you are in. We can't just be straight technical saying, oh, there it is. It's broke momentum line to remove the opposing zone, strong quality zone. I must trade it. No, you have to understand the general market condition that you are trading in. Okay, so yes, I agree. This is probably a pretty good zone. It looks like to me prices during this time were also, where was this trade set up? He was buying back into this zone right here, I believe, being his demand. He was buying, potentially reacting off of this support line, okay, which is also maybe a daily area of demand. Maybe he was a little bit shy of the daily demand, weekly demand it might be. He's a little bit shy, but it was close enough, okay? I wouldn't call this a bad trade. Honestly, probably one of the best trades that he could take. He's buying a swing long position when this is what the market looks like. That's what the market looks like when he's entering this trade. I agree with something like that. I would much rather be long a position like this rather than short in his gold market, okay? And like I said before, the technical approach, it's very nice. That's something I really like in his setup. Let's talk about another one. A long position, talking about market conditions, overextended markets. One problem I had with this, he is swing longing CAD yen 4-hour time frame, USD yen 4-hour time frame. He's trading the exact same zone 2 times. This could work out very well, and you could be laughing to the bank, or you could be crying to the bank, depositing more money, and then sending it off to your broker, because this is very dangerous if you start pushing yourself into the same position across multiple markets, okay? You're buying this 4-hour demand zone here. He's buying this, and he's buying this one here, the exact same setup. What I would recommend doing is just pick one of them and manage risk accordingly. If you want to trade both, split the risk, but don't go say 5% on one, 5% on the other. Break it up to say 2.5 and 2.5, or just pick one. Okay, that's my tip here. Now let's talk about the fundamental approach and the straight technical. What I want you to understand, he is swinging long, he's swing shorting this Japanese market. Okay, now something about this Japanese market right now, I want to share with you something. Once again, understanding market condition. The Japanese yen over the last month has been the strongest currency. You can see right here, the Japanese yen is up over 13% for the last 30 days. It's the strongest currency. So you probably don't want to be swing shorting this currency right now. All right? It's up over 12%. You don't want to just straight up say, I'm going to, short this. Definitely not on a day trading approach. On a day trading approach, you would be an idiot trying to sell this Japanese currency. It's the same thing if the gold is at all-time high. Why are we shorting gold if we're at all-time highs in the stock market? Why are we swing shorting the stock market or looking for shorts? Unless it's getting absolutely crushed that day, you shouldn't be shorting the market. If you're going to be shorting a market like this, they've got to be extremely low risk and extremely quick trades or trade management, okay? So with this in mind, the Japanese yen is the strongest currency. Now for a day trading approach, I would want to be long this, all right? Now on a bigger picture, if you just look at the last 30 days, this is the strongest currency. All right, and out of the whole world, this is the strongest currency over the last 30 days. You don't want to be shorting it, okay? But if you look on a bigger picture over the last 6 months, over the last year, over the last 2 years, the Japanese yen is the worst performing currency, okay? I'll have that picture up for you. It's getting absolutely crushed. So when I have this approach of you looking for swing longs when you're trying to sell the Japanese yen, I'm not totally against that. I would probably agree with you. But this is what this trader found. So if we look on a daily time frame, once again, this is the daily time frame. This thing's just soaring to the upside. I would agree. If I'm going to get long into a position, this is a pretty good market to get long into. And so I think he's buying in a good market condition of the market's just raging in an uptrend. So he went down to a 4-hour time frame. And this is something I like technically about this approach, all right? Once again, don't get married to your technical approach. So what he did here, he has drop, base, drop, drop, base, drop, drop, base, drop. In my analysis, in my strategy, I deem the market overextended if we have 3 continuation patterns in a row. So if the market goes like this, drop, base, drop, base, drop, base, drop, we consider this market overextended. Usually what occurs from this position is an elastic band effect. So if you grab an elastic band, you stretch it, you let it go, it snaps back. Okay, that's essentially what we're thinking the market is doing right now. It's dropping, it's based, it's dropping, it's based, and so it's like your rubber band, rubber band, rubber band. As soon as you let go, that thing is going to snap back with force and it's going to hurt. All right, that's typically what occurs in a market condition like this. And that's exactly what we had. Okay, we had the market overextended. We had weekly, long-term approach, the Japanese yen, a very weak currency. Okay, we have started to remove opposing supply. We have broken downward momentum, and we have a very strong quality zone being created down in here. Okay, I agree. It's a pretty good zone. We've broke momentum. We've removed zone, overextended market. It's a pretty good trade to get long. I would agree with that. I really don't see an issue with this. Now, the way that you would want to approach a market, or at least I would on something like this, is you would want to be quick on the trade management. Why? Like we just talked about 3 minutes ago, what is the strongest currency right now? The Japanese yen. Okay, where is that picture? The Japanese yen, very, very strong. Okay, so if this thing's going to go in your favor, it's going to go in your favor quickly, and it's going to shoot up from there. If it rallies up, just chances are, this is just thousands of hours, thousands of trade reviews. If it shoots up in your favor, okay, and then it starts dropping, well, you got to consider you're trading against the strongest currency over the last 30 days at this point, okay? Might not be the smartest idea at just leaving your stop. Say, for example, you have your stop in this general location. It wouldn't be the best idea at just leaving your stop down in this area thinking, oh, I'm giving it room to breathe. Because chances are, if the strength of the Japanese yen is going to continue, and then this market is going to continue to drop, right? You're buying the dollar, selling the Japanese yen. So for a long-term approach, I really like this, but you probably want to understand in a general market condition, it's the strongest currency over the last 30 days. It's an elastic band effect. If this thing works, it's going to work quickly. And if so, I want to manage my trade quickly. Okay, so what I would be looking is I'd be looking to at least manage my stop half off or break even after prices are taking off in my direction. That's the way that I would approach a trade review or a trade setup like this. Okay, that was really good. This is money stuff that I'm going into. I'm not sure if I talked about this one, but remember our conversation on gold, how you said you want to swing long gold? This is a good setup. I would agree. I don't see anything wrong about this setup. But over the course of his 9 trades, half of his trades are just poor, okay? And you're not going to do well making 50% of your trades being mistakes, okay? You have to be, trading good quality setups. You have to be managing to trade. So this is a long trade setup on gold. This is something I agree with, all right? Like we talked about in gold before, it's up over 18% for the year. It's in a very strong uptrend. He's trying to swing long this position, okay? Not only that, unemployment claims came out as a massive miss. Job numbers was a miss, okay? So people have been selling the market lately, all right, fearing that we're going into a recession. Bonds are dropping. Typically, people will go into a safe haven currency, okay, such as gold. So this is something that I would agree with. Fundamentally, it has a good backing, and technically, it has a good backing too. So this is why I like this as a good quality trade setup. Just understand, the best setups are going to fail and the worst are going to work, okay? Just over the long term, you want to be betting on the fact that the good quality trade setups are going to profit, okay? So here is this demand zone, beautiful demand zone, very strong move to the upside, removing the opposing pivot point zone, fundamental, the technical approach to everything. I really like this, okay? It ended up being a loser, that's okay, okay? But another trade I want to talk about here is on, was it pound Swiss? Sure, we'll have a look at this one. Pound Swiss 1 hour time frame. This was his supply zone, okay? I'm not totally against a zone like this, all right? Let's pop to his higher time frame, like a weekly or a daily zone. Where is this zone being taken place? Okay, so he's shorting daily supply. So he has prices coming back up into this daily area of supply. I agree. I think looking for selling opportunities using the daily time frame as his highest time frame is valid. Prices are pulling back up here into daily supply. Previously it was up here, it sold off quite hard. It's a tradable zone, so we can look for selling opportunities when prices come up here. Prices went up there, he ended up shorting this area up here. Might not be the best zone as in the quality, but I want to talk to you about his stop loss. Why the heck is he placing his stop loss? Where is he placing his stop loss? I don't even know where he's placing his stop loss because he didn't even mark it out, okay? But if he is shorting this zone right here, why you don't want to have your stop loss right here? That would be really stupid. The only 2 areas that I see a valid stop loss is 1, right here, or 2, the most conservative approach is up here. Those are the 2 areas that make the most sense for a stop loss location, okay? I agree with his higher time frame, but if he's going to be wrong on a stop loss up here, that means the market is going deeper into that zone. That's something I would rather have in this case, okay? So if I'm wrong, I wouldn't want to keep it tight. I would want to keep it, a technical stop above pivot points, either right here or above this area, okay? This one will be slightly more aggressive because it's lower and you're just getting this kind of lower pivot point versus this pivot point, all right, which is a lot stronger, okay? Now it might hurt your reward to risk, but there's going to be trades like this where if this trader took this stop loss right here, he's getting stopped out of his trade and losing, versus this trader, he's made money. So there's pros and cons to this. This trader might not have as much of a reward to risk, but he's going to have a higher win-loss percentage typically. Okay, there's pros and cons to this. But I don't necessarily disagree with this. Now, technically it's not the best setup, okay? But it's decent. Now I want to show you what I'm typically looking for in some of these setups. If we go over here, let's go to the trade review tab. Talking about selling these markets. Okay, the stock market over the last 2 weeks, what has it been doing? It's been selling off very hard, okay? It's been selling off very hard. If you're going to be a day trader, you'd probably want to be day trading shorts, okay? So this was a trade that Isaiah took, selling in a downtrend, market's crashing. I want to join the trend in that direction. For day trades, you wouldn't want to be day trading longs unless prices are like seriously pushing up, breaking structure to the upside, right? We'll talk about that. This was his short on the NASDAQ, okay? And we're going to break down into stats. This is fantastic stuff. I appreciate if you guys like the video right now. If you have any questions, let me know in the comments below, okay? So we talked about the higher time frame. Stock's been crashing. What's the fundamental approach? Okay, job numbers, complete miss. They're debating if they should have emergency rate cut. Unemployment claims is going up, okay? Unemployment numbers. Bonds are absolutely crashing. Okay, so this is building into our fundamental belief of the market's going down. We have a technical approach that market's going down, and this is a quality setup. This is something I really like on this setup. He is selling back into a supply zone, but what do you notice this supply zone being? Very strong 2-to-1 imbalance right here. I just realized I can't make these videos going into 7 or 12 minute long videos because in order to get my point across, I have to go over several ideas. Nothing drives me crazier than people say, how to trade this strategy, and then they go into one setup and say, what do you learn through one example? This is why I like to go through several examples, okay? And this is why it stretches longer, but hey, this is trading, this is life. So this is a setup that has a very strong imbalance. Within the first 3 candlesticks, it's gone over 2-to-1. Look at that imbalance. Not only that, look what it accomplished, okay? It's blown through this pivot point, and this pivot point. All these lows it blew through, and it didn't take 10 candlesticks. It took 1 candlestick, all right? If we look at this guy's trade review, let's go back to this guy. He was shorting, you know, this zone. Why is he selling this zone? It has a good imbalance, okay, but it's not blowing through pivot points. This is something, it needs to break structure quickly. Same thing here, okay? This zone that he's selling here, it's not removing structure. It might be breaking momentum line, it has a good amount. It's not breaking structure. Okay, this is what I want to talk to you guys about now. We got to talk about breaking structure, okay? And having the fundamental bias on our side as well, okay? If we look at this, very strong move, 2-to-1 within the first 1 to 3 candlesticks. Not only that, within the first 1 to 3 candlesticks of this imbalance, okay, it is removing opposing pivot point lows and demand zones, blowing through these areas, okay? And it's also breaking momentum line, trend lines to the upside. This all was accomplished within 1 to 2 candlesticks, all right? This is why I say I like to have all that accomplished within 1 to 3, maximum 4. M4 we're gonna do. I like to have all those things accomplished within 1 to 3 candlesticks, okay? Look at another trade review. Japanese yen. Why do I love him selling this yen? Japanese yen, what did we talk about earlier? It's the strongest currency over the last 30 days. Why are we day trading longs this thing, right? I know this guy didn't, but why would we, you know, trade against the Japanese yen for day trades? That's what I'm trying to say. We wouldn't. This thing's up over 12% over the last 30 days, okay? So with this market crashing to the downside, in his brain, he's thinking, hey, I just want to buy this Japanese yen currency and buy into the strength, okay? It might not be the currency that I want to swing long, okay? Because over like super long-term position, I mean, it's the worst currency over the last 2-3 years. It's been doing nothing but going down, okay? But over the last month, it's been very strong. So for a day trading and scalping, this is your dream, okay? Very good approach here on this Japanese yen, okay? Look, breaking momentum line, removing pivot point, removing pivot point. Very strong move, okay? That's what I like to see on something like this. I think he actually sold this once prices came up and had that rejection. Then he entered the trade. That's one way to do it, okay? He's waiting for sellers to come in and then he's joining in, okay? Or you sell it straight up and sell that supply zone straight up with your stop either there or up there or wherever, okay? But that is a straight technical approach merged with fundamentals, because some people are just registered, oh, look, it's a good technical, and they get married to this position saying, oh, it's everything, it's above the 200, we got a buy setup. Johnny Cochran from Elmo Street is telling me to buy, right? And you join into this and it ends up being a loser because you lose context of what's happening of the market. And it's a major thing that you have to understand, okay? So let me break down to you some of this stuff, because we can profit off of these trades, off of these zones being removed, all right? We can profit off of good zones being removed. That's that next level of thinking that I tell traders in the program. When traders come to me in the program, they got to learn the core material, right? And during that time, I get them to get 30 to 40 trade reviews. We meet up again and we go over the 30, 40 trade reviews and we come up with what a good setup has in common versus a bad setup. And you see these things, and it's the same things I'm rifling off to you guys. Trading with the trend or in a sideways market, 68% versus trading counter trend, 31%, okay? What about this guy? Tyson, the guy that I've recently just completed our one-on-ones with, okay? When he's trading at a quality zone, 19 winners, 3 losses, okay? Versus if he's trading at a poor zone, 1 win, 5 losses. And this isn't just for one person, all right? We're figuring out stats everywhere, okay? What is right here, good setup, average poor, 12 wins, 5 losses. When he's trading a poor setup, 3 wins, 6 losses. So it's important to understand the core trading strategy, understand what a good trade setup is, come up with 30 or 40 trade reviews, review to see what makes sense, right? That's what's built around the 90 days. After I complete this one-on-one, I tell them, okay, this is what I want you to focus on. But they have that training and mentality of they know what to look for. So after this one-on-one, I start telling them, okay, now I want you to start considering trade management. How can you manage the trade better? Okay, at what point can we start moving our stop? At what point can we go for higher reward to risk instead of going straight technical? Because if you want to elevate your trading, you start adding discretionary trading, okay, and intuition into this. This is a profitable setup, trading straight up technically, okay? It's great. Now they believe in the system, okay? After that one-on-one, they start trading that setup and they get good results. I tell them after 20 to 30 more trades, we're going to sit down and have this conversation again, but we're going to have it about trade management, okay? But then after that meeting, before it ends, I tell them, hey, I want you to start thinking about discretionary trading as well. Before that, we were talking about trade management, right? The last call we got off, we were saying, start thinking about trade management. Now they're getting their trade management down, all right? And now we start talking about at what point, now we know what identifies as a quality zone, okay? And when we know a zone is going to break based off of trade management and thousands of hours and hundreds of trade reviews, I want you to start thinking, can we take the opposite side of these trades? That's that next level that I start telling people to learn, okay? And it's something, let me show some trade reviews on something like this. All right, this is why you can't get married to this type of stuff as in the market direction. You got to be able to flip-flop depending on what the market's doing, okay? A couple trade reviews was on this one. This was that same day gold was rallying to the upside, okay? This was a supply zone that we saw being very weak. It was a valid zone, so the long-term belief was we were very bullish for this day, very bullish for the day, okay? And what I noticed when prices came back up into this zone, we tested once, we dropped, rallied up, dropped. We're making lower lows and lower highs. That's good. But at this point, when we rallied back up, normally from this point on, I would want to see this thing drop already. That's a sign of weakness, that the fact that it's coming back up now and pushing deeper into the zone, that's telling me that the trade is weak, that this zone is weak, and that there's a higher chance of this thing popping to the upside. So I'm not against straight up, if you see this and it's pushing to the upside, because at this point when it's rallying back up, I'm okay with that. But I want to see this thing drop. Instead, it pumps to the upside. That's a very bullish signal. This zone, if it was going to work or hold already, we know it should have already dropped by this point. So if we were short, we have to be getting either out of this position at a 50% loss, okay, managing that risk, but we can start considering, hey, if this thing's gonna shoot to the upside, like, you understand, the reason why you are closing your trade, the reason why you have a stop is not necessarily just to say, I'm okay with losing $100. You are placing that stop because you have that stop there, because if you get stopped out of your position, you gotta understand, you think in your brain that if your stop gets hit, it's going to go higher, okay? Because if we have our stop right here, let's just say at that point, I'm willing to accept that I'm wrong, okay? So if you believe that once that stop is hit, then there's a high chance that you think that the prices are going to continue to go up, okay? Because if you thought, well, it could go up to here, then it could drop. Why would you place your stop there then? Why wouldn't you place your stop there? Why wouldn't you place it higher up, right? That doesn't make any sense, okay? There's a risk factor to it, all right? But now we're basing this off of a technical approach, and if we see this thing basing and it's pushing up, we know this is a very bullish signal, and that this zone has a high likely chance of failing. And so I will look at just buying this area straight up after the pop, okay? And I will get long. I could wait for the breakout retest. Let me share another trade example on something like this. So this was the NASDAQ, okay? NASDAQ long. On this long, okay, we had prices, we already know the whole fundamental belief of this. Stock's been going down, it's been getting crushed, bonds have been getting crushed, unemployment numbers miss, okay? What else? Unemployment numbers, job numbers, okay? Everything's getting crushed fundamentally right now. Stocks are collapsing, all right? Prices were pulling back up into that supply zone. Great area to be looking for selling opportunities. Great area. I 100% agree, okay? We came up and tested it, sold off. Perfectly fine. That's to be expected, okay? But what does price do at this point? Prices rally up and actually go deeper into this zone, okay? That's not a very bearish signal. That's a pretty bullish signal at this point. From this point, prices drop and actually react off of this new area that price pushed deeper into it, okay? This is where prices start coming up again and basing out here. This is a very bullish signal that sellers are unable to take control of this and sell to the downside. I would have liked to see this thing sell off from here. I'm okay if it came up deeper, but I want to see it break that previous structure and go lower. It's not doing that, okay? The sellers are unable to take control. And in fact, the buyers stepped in. We held this resistance, 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 but each time it was making smaller moves. That's a very explosive move that's potentially coming. It's a very bullish move. And so when prices, this is the game plan, we were talking about this, hey, there's two options here depending on what prices do at this point. At this point, when we pushed to the upside, this is what I'm thinking a breakout or a breakout retest trade. All right, and that's when I was playing this, because now we have this right here. We go over here, sold off, went deeper, sold off, was unable to break that area, rallied up, sold off, smaller sell-off, coming up again. It's getting tighter and tighter. So usually when a market like this, it shoots to the upside, all right, a breakout. I was playing the breakout retest, betting on the fact that this is a zone that was going to fail and go deeper, okay? Buy the breakout. I didn't buy the breakout, I brought the breakout retest back into here with my take profit up there, okay? Hoping that prices would go deeper. It got me filled, rallied up. It just missed my take profit. I moved my stop to break even because I know if prices are going to drop back down into this zone after thousands of trades, there's a high chance that it's going to ultimately break structure and go to the downside, okay? It's weaker, it's been tested, the buyers were unable to take control, the market has been getting squashed. It's not something I want to be in long term in a day trade, okay? This is what I mean. We've gone from day trading to swing trading, understanding the market condition that you are in. It's important because a different market condition, you could be in a different market condition if you're looking at a long-term position trade versus if you're a day trader or scalper. Okay, and that's what we were doing. We were transitioning to, to both sides depending on the trade setup it was, right? And so that's why it's very important if you're going to be trading this is understand the market condition and understand what the quality trade setup is. Okay, very important to a trader. And this is something that we do in a private group. We first bring you through the whole core strategy because it's important that you understand the core strategy, right? You start taking trade reviews, you start making mistakes, you make good trades and bad trades, but you hear back from me saying, this is what I like, this is what I don't like, all right? You get those 30 to 40 trade reviews. We sit down and we're like, hey man, you notice a lot of your winning trade setups have these things in common, right? And we start circling these things and we're like, this is what we need to focus on. All right, they start doing very well after that, right? It's a whole step-by-step process that I work with each trader, and that's why it's very important to be working with a coach directly on how to properly implement this stuff, okay? This guy would just keep on trading like he has no idea of all the mistakes that he was making. But there's a lot of mistakes, but you're not going to do well making 50% of your trades being mistakes, all right? There's a lot of technical problems, but there's also a lot of fundamental problems, but that's why it's important to have a coach next to you, breaking down with you mistakes you're making and what you're doing well, okay? So if you would like to become part of that program, I'll have it in the description below to join the Moneyball Trading Program, where the whole goal is to become a profitable trader in 90 days. Okay, I have a full tips playlist talking about supply and demand trading strategy that I will also have in the description below, breaking down my whole trading strategy in an hour and a half, 30-minute long videos showing you what a good quality trade setup is. Okay, I appreciate if you guys like the video, subscribe, and if you guys have any questions, you can reach out to me down below in the description or reach out to me on social media at Moneyball Austin. I will see you guys later. Cheers. Bye-bye.